So I was at work and I was still checking out bank stocks because that's something that I'm interested in looking at because I believe that bank stocks are going to be going down as a result of the Fed continuing to increase the interest hikes at 0.25% each time. I found three in particular bank stocks that are very high risk but very high reward. Okay, so one is First Republic Bank, ticker symbol FRC. The second one is Zion. And then the third one is going to be Key Corp, I think is what it is. And ticker symbol for Zion, I don't know. We'll get to it. But here's some of them that I was looking at, right? So this is one that's taking a huge hit. First Republic Bank. And they have articles about it and so forth. But the hit came, let's see, where is it at? So right in here. So it's saying March 9th. So this is before, this recent Fed, meeting thing. But this is one that I was looking and I'm like, and I got the balance sheets and stuff pulled up and I'll look over it. But that one just straight tanked, I was like, what? So it's like the 8th is good. And then it just started tanking from there, it looks like, over 5 days, so a week. And yeah, wow, that was something crazy. Why First Republic Bank could be in real trouble, and it has to go with like saying loaning out money, not getting it back, doing crap loans, stuff like that. Not doing what a bank's supposed to do, and generate earnings from lending money. But this was one I was looking at, and I was thinking, gambling at its finest right here, but very, very low. You look at like the it's saying 8.62 dividend, price to earnings 1.52, so they still do earn, but I'm like, that's wild. And I was looking at the balance sheet. It's in the thousands. So if we read it right, thousands, that's $4 billion in cash. And then you look at current debt and capital. Make sure I'm looking at it right. Yeah, so that's yeah, 6 billion. So 4.2 billion in cash, 6 billion in current debt and whatnot. So that's something I was looking at. Available for sale securities, 4.7 billion. So you add them together, you got 8, almost 9. So I was like, this could be something to literally gamble on. This is going to the casino and gambling. So this is something I was thinking about looking at. Not a big position, obviously, because it is not a safe one to get into. And real quick, I was pulling some stuff up here, but I totally forgot to pull up dividends for it. So let me see real quick. FRC. And let's take a quick look on the Nasdaqs for the dividends here. So dividend yield 0.78. Okay, so it just paid one. Those ads are, and they literally never go away. They just keep popping up. Anyway, so what I was trying to say here is the last one down here, February is the last payment. We got 27s, 22s, 20s, 19s. This is either, and it continuously goes up, so that's really cool. But the crazy part is, them taking that huge hit in the, in the stock itself. I was like, wow, that's just insane trouble, But they say like, you run stuff. This might be something that I would gamble on. Literally, that would be it, just gambling. So we will see. But that was one I noticed. That was crazy. Then you have Zion here. You see this one's starting to tank off a bit. If we look at the 6 months, it went down, and it's, kind of on that trend. And you're looking at a $4 billion market cap. So real quick, for First Republic, market cap is $2.29 billion. I was putting these in order based on the smaller market caps. And the dividend yield on that is, see, I don't know. Literally gambling, but I don't know. Sometimes I gamble, But, yeah, so here's Zion, and that's, going down pretty good amount. So, you come across here, there's not a whole lot of time where it spends, below this point. So this is also another one that I might be willing to put a little bit in just to gamble on. Maybe like, I haven't really decided, it's kind of hard to say really where I would be willing to try to go with this. Like maybe $500 or $1,000 per stock to put into it just to see, But PE ratio 4.74, 5.97%. You look at Zion right here. It doesn't have a whole lot of balance sheet, but in the thousands, 89. See, it says 89 billion. That's what I'm thinking, right? Because in the thousands, but that's total assets and whatnot. So, but then I look here and you just got like market cap 4.08 billion. Still trying to understand some of this stuff. But total liabilities, I'm just going to go 84 billion, assuming that I add 1,000 onto these numbers. And I'm just like, Another one that I was just kind of randomly looking at just because it took a huge drop off. Zion. So we're going to have to come up with these little ad things. Going to throw at me again here in a minute. But let's see. Yeah, pretty sure it's, that one. Okay, so 5.44. Again, it just paid in February. And it also increases. If you look at the trend here, I don't want to put my mouse too far up there just because I don't want the ad to pop up. But, it's gone from... So we started getting back in 2018. It looks like is when it starts to, go. But consistently, a dividend that goes up. These are just things that I'm looking at, and then... Yeah, these are things I'm considering when it comes to low stock banks to maybe kind of just dabble with. Because I'd love to get into those higher ones, like I said, but I'm looking for deals. And this is just interesting to me, some of these. This one seems obviously more safer, than First Republic over here. And then you look at Key Corp. That's a 10.50 billion. PE ratio 5.86. I like low PEs. Dividend yield pretty low. And this one, it dropped off, a pretty good little amount too. If we look at the last 6 months, it was setting up around 17.55. Even at this little dip, 16.07. So there's some pretty good upside to this. If that's how it goes. We don't really know. But again, these are things I'm looking at because I'm seeing, cheap, less expensive, and there's a good, they could be good rewards. But then again, First Republic, if it goes completely out and you put $1,000 into it, then you gotta accept the fact that you lose out a bit. So you don't want to put in any more than you're willing to risk with the company. But these are stuff that I'm looking at because they're very low. They're banks that are hurting, and it to me is appealing. Same thing, the balance sheet for Key. So same as probably say in the thousands. So we got 887 million is how I put that. And then you look at current debt. See, this one here is crazy kind of because if you look at current debt, you would put that at 5.4 billion almost. But then you have the cash and then you have securities. And that's where you're looking at the 52 billion is how I'm, throwing 1,000 at the end. Available for sale, and then, yeah, that's where you go, 39.2 billion. So, you're not bad, you know. When you look at it like that, you know, if you sell 39 billion worth of securities, if I'm reading this correctly. Like I said, nobody in my family's ever done stuff with stocks. It's just me learning what I can do. You know, versus 5 billion, I like that. It seems decent. You know, and then we go up here, we type in key. It's got to be something pretty decent, I would imagine. Okay, let me redo this. Alright, so I guess I have to scroll down a little bit more in order to catch where the dividend would be, the dividend payouts. I'm not quite sure why it went that direction for. Huh. Let me see if I can just find this real quick. Alright, dividend pay date, annualized dividend. So I had 82 cents right there. I wonder why it didn't show it the way the other one did. I'll just do this. Key stock dividend and see if it pulls it up. No, it says 21 there. Let me see if it'll pull it up this way now. Okay, yeah, now it pulled it up. I don't know what the deal was with the other way. Alright, but if you look, same thing. When you look, you know, from it being down here moving up, it's been increasing the dividend, you know, pretty nicely. So that's pretty cool. You know, and then you know, like we look at the balance sheet, you know, it looks pretty good. So these are some stuff that I am more interested in because those are dips. So I'm going to follow these 3 banks, and I'll continue to look at some of the other banks as well, but given, you know, PEs, given the dividend yield, you know, that they're paying and whatnot, like real quick, you know, like Bank of America, you're still, okay, PE's not bad, but dividend, but, you know, when you look here, it's still way up. You know, I want to be able to ride stocks up on the graph as well. You know, and here it's pretty high, you know, so I like to try to get a good dividend and ride it up. Like Zim did good again today. I've been riding it up. I think I'm on like about $3,000 up on that position, not including the dividend I will receive next month. Where it hold at that, I don't know, but I still think it's a pretty good company, so I maybe. But these smaller ones that I showed you, yeah, you know, there's stuff that I'm like, you're getting in at a good thing. Okay, it actually showed me golden stats. Cool, you know. So 10.47 dividend. You go here, it's all the way up here. So it's not like you would buy in down here and be able to enjoy all those. I also want to enjoy the increase in value as much as getting a good dividend and getting a good deal, buying it when it's on sale. Okay, so what other ones do they have here? JP Morgan, I haven't picked that, so see JP Morgan 10.5, 3.15. Go over here again, it's way high up on the graph. You know, most of them are. So yeah, that's why I'm looking at these in particular companies. Again, I'll go quick through it. This one obviously extremely, you know, you just got to read about it. That's just insane, way down. So, but the more riskier ones are first, you know. Then you got Zion, not too bad, and then Key here, which is starting to look pretty good, you know, for a bank, you know, and the PEs, you know, all pretty good. But anyway, I just wanted to share those 3 banks with you that I've been watching. Obviously, they're high risk, but there's also high reward. And I'm considering looking into a few of those things as well to the portfolio. So a bit more risky, but I'm considering checking it out. But anyway, that's what I wanted to share with you guys. I hope you guys thought it was pretty cool. Even if you don't want to get into something like, you know, First Republic Bank, obviously, like I said, this is gambling. I don't recommend somebody throw all their stuff into it. Only what you are willing to lose, and bet that you probably will lose it with one like this. Key, that's completely different. I think this is more of a safe play. But, you know, First Republic is literally gambling at its finest in the market. But anyway, y'all have a good day and whatnot, and I will let you know. I'll update y'all when I do decide to make some plays on some stuff and see if there's some good reward with it. So for the banks, that's what I'm watching. That's some stuff that I was looking at. So pretty cool. Catch y'all on the next one, and hope y'all continue to make a lot of money with your investments. Bye.